Hello, this is Mike. I just want to give you just a review of today's trading. So today is Tuesday the 9th of December 2014. The first thing that I did this morning when I started trading was because I'd missed Monday's trading, I had to do what I'd normally do at the start of the week. So that what I'd normally do on like a Monday morning, I had to do this morning, Tuesday morning. So the first thing that I did, just delete that, was to just do a Fibonacci retracement just to see where we're up to in terms of like the Fibonacci. So we can see there that the 23.6 level is the level at which we bounced a few weeks ago, and then we've broken through that 23.6. So the 23.6 is like the last sort of leg of the Fibonacci that we could use as support. So that pretty much negates the use of Fibonacci for now anyway. So I'll just remove them. We're not using them. You can see that like when the price did come down, you had all this selling, like constant selling, and we remained in an oversold condition for quite a number of weeks until we got to that 23.6, which was there, and then we went from oversold to to more of a neutral, coming out of oversold conditions on the RSI, Wilder's RSI 3, and that's sort of started to climb up, going from overly negative to more of a neutral, trying to get into more of a positive territory. So that's one of the things to like look out for. Also, we've got like a MACD looking to cross as well. So there's a few things that there's a few indicators to say that we could get a bounce. The next thing that you need to do is just to see like what price we would be bouncing at, because we've got those indicators which tell us that we're going from oversold to more of a neutral standpoint. Got to just see what the trend lines are saying, so like see what the levels are that the trend lines are picking up. So we've got these trend lines that have just drawn, which is from like the previous two lows. So you've got like this low from like 2010. Was it? So that's November 2010, and then we've got this. Sorry, it's not November. So that's June 2010. So we've got June 2010, and we've got July. July 2012, and then so we've created like a higher low, so that's bounced up higher, only marginally, and then this trend line sort of comes to the low that was created on Monday. So that's not much of an indicator for us, but it's good to know that there's another reason why we should get more of a bounce there. So once I've done that, because the trend lines in free stock charts tend not to stick around, just making note of that using like the horizontal line tool. That'll just give us just a basis for a price area which we should bounce from if it was to come back again. Right, so once you've done that, you go into the half an hour time frame. That will give us like an idea of where like what's going on in a shorter time frame. So you can see that we've got this low that was created yesterday. So on Monday we got this new low, and we also got a double bottom, and you can see like the first well, that this new low that was created, the price came up and broke past the previous low with a really strong candle, and then came back down to near that level, touching was it 1.2250, and then creating a wick, like quite a strong wick, and a series of green candles from there, which shows that there's a short squeeze taking place there. So we go back to that area. You can see that the short squeeze, yeah, these sort of like patterns where you get a lot of really quick sort of buying up once we get down to any area that could be bought up, is a strong indication that we could go a lot higher in the future. So if you ever see that, that's possibly what will happen. What you tend to get as well with these moves is like they get to a point and then there'll be sort of like a blow off top with this, because price didn't want to, well, because nobody wanted to sell this down, because you had this really strong double bottom. You just got like this sort of blow off top which never really sold off, and it just kept going. So like the first thing, go back to the 15 minute. So the point at which I started trading was around about here. So you had this double bottom, came up, came back, and then just continued up. And you can see like on the 15 minute chart you've got the EMAs sort of expanding to show that the direction that it's going is quite a strong movement, so it's a strong trend. So we go back to the 5 minute chart, you see sort of like trades that I started to take were based on first of all this, where is it? So you got the Fibonacci extension tool, so I took that from the low to this new high that was created, and then I used that, just add 127. Uh, 127 is a good price area to have, just to see, just as a level for resistance. So you can see that like once price came back up like through this high that had been created, it stopped at round about the 127 area. So what I did was like I only got like one trade in there, and that was the second one, because I wasn't too confident on this one because it hadn't touched the 127. I just waited for a double top. The double top was confirmed by the RSI, Wilder's RSI 3 being overbought there, and then when we got to the to create like the second high, the Wilder's RSI was a lot weaker, so that indicated to me that it was going to like roll over. The next trade that I took wasn't for a while. It was at 161.8, and it was just here. It was this one. So once that touched 161.8, I took a put there. And then that sort of area, what was it? Changed the Fibonacci extension to this new high that was created. I actually at that time I had both of these like on there, even though it gets a bit confusing. That it's good to have them both, because sometimes levels are taken from like either or. It's never usually just like one Fibonacci setup, because you're basically trading along with a lot of different traders. So if you've got like a few reasons to get in at a certain trade, that's the best way to do it, because it means that you're getting in with a load of other traders. Like, so the more reasons you've got to get in at a certain trade, the more reasons it will work. So like at this area, that was like 127 from there. I didn't actually get in there because I changed the Fibonacci extension after I saw that. So like once it broke up from there, I got in up here, but down here, the reason why I changed this Fibonacci extension was because of this. So once I changed that, you can see that once 1.24 was lined up with these two tops, which would have been really good like 5-minute puts, but unfortunately I didn't get them. But I did get the 161.8 from that setup, which was just up here, and that again was a put. And then because we were like so high up, I did quite a few puts based on price coming back up to this high, and then failing. And then I also did Fibonacci retracement there to there, and got in at what was that, 61.8. So we had this like sell off, and then this bounce and this bounce, because the MACD had crossed into negative. I was pretty confident that that wouldn't move up and retest that high, because if you remember back to like the daily, we're still in negative, a negative trend, so we're still in a downtrend. Right, so I had that, and then there was a series of trades which were just really easy, because we had like a huge run up and then selling off. I was basically waiting for the afternoon for the sell off, because I always trade as a reaction to moves rather than sort of predicting a move, if that makes sense. Because we've got like a massive move up, which can't be. Rarely it happens. Like if you're in a downtrend and you get a massive move up, it's usually going to get to a point and then just start selling off again, because you've got the overall trend, which needs to be adhered to by the majority of sellers. So you've got this move down, and then simply it was a case of like adding sort of areas of support and then seeing if they broke them. So we had like this first one, we broke above and then moved down. So that area of support, we had these like two wicks which broke above it and then moved down, which means it wasn't going to continue up. Also, because the MACD was negative, like quite strongly negative, that was a good area to get a put. I only got like one put there, but normally I'd use quite a few 1-minute puts and follow that down, but I didn't, unfortunately. The next one that I did was based on Fibonacci extension, reversed Fibonacci extension. Whoops. Let's get rid of these. So the Fibonacci extension was based on this move from there to there, because I knew that this move was really strong, and it was a move based on a really strong reversal pattern. I knew that price wanted to stay up in these levels, like rather than just sort of selling off, because there was a pop which was sold off. Price is looking to do a proper reversal, so I used this Fibonacci extension just to pick out an area which I could get a call in. The area that was chosen with that also happened to be a previous high, so it was also support a previous resistance level. So I've got a call in there. Yeah, so I got a call in before I did the put on that one. And then underneath that we had another call, which was 261.8, which I was quite confident in because I saw that this one had worked. Obviously, like, traders are getting in using this Fibonacci setup. And then past that we also had this support level which was created. I'll just use this horizontal line so you can see the support level. We have this support level which was created, and then the support level was broken through, and then it came back up, and I put another put in there, and then that came down, and that was the end for trading. Then the reason why I stopped then was because we were getting into sort of like a stale sort of area. Once the markets close, you just get this like bunching, and sort of like the direction tends to be a lot slower, because I tend to like to get in with like 5-minute trades. I don't really like this at all. I don't like it when it sort of slowly moves in one direction, because it could easily just like quickly sell off, and you don't quite get an idea of which way it's going to continue up. But yeah, that was where I started. I stopped anyway. Right, just one other thing to show you. I am going to do a little challenge. I've set myself a little challenge in January the 5th next year, 2015. I'm going to turn £20 into £20,000 in less than 2 months. I'm going to be using screen sharing software, so if you sign up to the email sign up here, I'll give you like instructions for how to enter like the trade room, and you can watch everything that I do. So you watch like every trade, like one step at a time, and like the reasons why I take the trade, and like the justification for it, etc. I'll also be talking about like trading psychology, money management, like everything basically. I didn't really mention the news. I usually like check out the news, but I knew beforehand that there was hardly anything worth noting today. So if you are interested in following me for this challenge from like turning £20 into £20,000, then sign up. The link is in the description below this video. Thanks for watching. Bye.